in terms of that TAM and that opportunity, where is it really going to be right now?
Nature tech is so hot right now, especially if you're in nature tech. Like there's new companies emerging every day that have some really incredible ideas. There's a lot of AI companies in our space. We don't use AI for a product because we are focused on quantifying nature risk. Anything that you need the right answer every time, the AI, especially like the LLM stuff, isn't the best tool for that.
The outsized influence of American media on the world may have you thinking that ESG is dead. Wall Street abandoned it. This isn't true, certainly not in the rest of the world, and not even in the US. Nonetheless, the first wave of ESG companies and processes had many problems. We're now seeing a new wave of startups and processes around financial risks from climate and nature. Joining me to address this is Megan Pillsbury, founder and CEO of Dunya Analytics, a US-based startup focused on providing insight into companies and investors' exposures and risks when it comes to nature. Megan Pillsbury of Dunya Analytics, welcome to the program.
Hi, Jane. Thanks for having me. I'm happy to be here.
Great. So we're going to spend a little time talking about what I think of as the new ESG, and that's my term, not yours. But environmental, social, and governance factors embedded in financial services and processes. Uh, you're in the United States now after a career of investment banking and technology at places like Morgan Stanley and Goldman, running your own ESG startup, and wanted to get a sense of where are we? What is the playing field like, given, at least in the US where you're based, the politics have gone a bit sour on anything ESG. But where I am in Asia, it's powering ahead. And so I'm just curious about what is the landscape now from a fintech point of view? What is that opportunity like? How are you navigating this kind of divergence in political favors or momentum?
So you're right. The rest of the world is kind of advancing still with all things ESG. And the US is attempting to, as I see it, keep the world back behind in kind of a fossil fuels based economy. So that's the economy of last century. And the rest of the world is ready to move into the economy that we need to build for this century and future centuries that is a more sustainable economy. So historically, ESG, environmental, social, and governance, has been focused on what else companies need to manage effectively from a governance standpoint that doesn't show up in the financials. So how is that company impacting the environment? How is it treating its like people, stakeholders, and its community? And how does its leadership and internal governance structure look? Which ultimately, if these things are managed well, does lead to higher financial returns. And that has been proven out many times over. There's a lot of research showing that companies that do manage ESG effectively outperform because they're essentially better at risk managing and governance, especially in the long term.
Now,
S-
okay, yeah, sorry,
Mhm.
good. I didn't mean to
Oh, I
cut.
was just gonna say I was gonna go on, but if you want to derail me like, to get to something more to the point, I'm happy to be interrupted at any
Okay.
time. I was just gonna say, like, now I think there's a recognition that ESG can drive value
Mhm.
and opportunities as well. So there's a downside risk component, which is where a lot of the ESG stems in from. But as companies embrace ESG, or the risk component of ESG, they actually uncover opportunities for building a better business and new business opportunities as well.
In my narrow world of fintech, one of the most interesting aspects of this, which I was covering for a while, was using sort of on-chain carbon credit volunteer markets. And I want to quickly get a sense of that's not related to politics per se. We saw these in many parts of the world. I don't think it's really worked out very well. And I know you're less on carbon, you're more on nature, or I think some people might think of that as biodiversity. Um, and I think there's some budding attempts to create marketplaces for credits in the nature space as well. Can you tell me a little bit about what has to happen to make a market for these sort of things work? And what have we learned so far from the example in the carbon space that points us to a better outcome?
I think the carbon market space has experienced a lot of scandal.
Hmm.
It was effectively an unregulated Wild West. You had big companies who were trying to align to the Paris Agreement, limiting us to maximum 1.5 C in temperature increase globally. And so companies looked at how do we get to carbon neutral? And that was intended to be in big part reducing the carbon footprint. And many companies have invested billions of dollars to reduce their carbon footprint and again, uncovered amazing opportunities. But where they can't get all the way to zero, then they turn to carbon offsets for that. And there's mixed results in the carbon offset space. In some cases, you had organizations planting monoculture, which isn't really restoration. Monocultures often fail if they're not managed forests. There were also incidents where organizations were displacing local communities in order to plant trees where people lived, also not an outcome that you want. Now, with the emergence of biodiversity and nature markets, I'll put quotes around them because they're still very nascent. You have a better understanding of the carbon markets and what they're supposed to deliver as well. So, I think the first generation of nature that you see in a market, like where you can trade nature, is still on the carbon trading infrastructure. But now those carbon credits are trying to become high quality credits and that they bring in what are called co-benefits. Like, yes, you're restoring or absorbing carbon through restoration, but let me show we're also increasing biodiversity. We're not planting monoculture. It's a proper restoration. It's community involved or even better, community led. So you're getting a much more well-rounded and usually then much more effective credit. There is also an effort to create biodiversity credits, where as companies start working on their nature strategies and aspire to become nature positive, they again have in mind, let's reduce our footprint on nature as much as possible and then offset. Now, nature is not like carbon. You can't destroy one ecosystem and replace it with another ecosystem. Like you can, fungibly pull carbon out of the atmosphere to offset where you've put it somewhere else because it literally averages itself out. Um, so many people, myself included, don't think that carbon offsetting is the right approach, but maybe, biodiversity offsetting is the right approach, but where you can do additional contributions to biodiversity. So even if you can't get all the way down to nature positive in your own operations, which many companies probably can if they try, then there's well, can we spend extra money to do some restoration somewhere else and not call it an offset because we do need more money flowing, more corporate money and investor money flowing into nature restoration in order to hit the 30 by 30 target for nature, which is the kind of 1.5 C Paris equivalent,
Mhm.
where we need to protect 30% of land and oceans by 2030 under the Kunming-Montreal Agreement.
When you're trying to build a market, I think it's a combination of regulation, of market incentives, and technology. It's not just one thing usually, but looking at the landscape today, which of those three is probably where we could maybe see the most progress if we focused on that? Where do you hope to see the biggest changes to drive this?
There's a lot of work being done. Like there's actually a huge stack of infrastructure that has to come into play. To your point, there's let's say that there are, large institutional funding that is billions of dollars that's looking to flow into restoration projects. But then a restoration project isn't $1 billion project, right? It's maybe $1 million project. So you have all these small community-led projects that are happening, and there's not the infrastructure to connect those dots. There are a lot of people working on building that infrastructure. So there's an organization in Colombia called Civimbo. They're an indigenous-led restoration. They have developed a white paper defining what a biodiversity credit is, because in carbon, we were able to get to kind of like a GHG equivalent single metric that you could trade on. But in biodiversity, we don't yet have that. And they have made an attempt to quantify that so that it becomes tradable. And then there's the where do you trade it and like how do you get the rest of those pieces of infrastructure? So there's different organizations trying to fill the different gaps on that. And it comes all the way from like, where does that big money go? Is there some kind of fund that can then break it up and allocate it into maybe other funds that are regional specific? And then how do you select projects and deploy those to the community? And then even within a community, how does that money get allocated in a way that's fair? Because these communities, many of them like operate not on what I would call your mainstream economic structure.
Mhm.
So there needs to be kind of a lot of work done or focus on letting the community collectively decide how those monies get used. Some it goes into like a central pot that gets used for the community, some do payments. So there's a lot of this kind of infrastructure that goes into place with the trading. And then additionally, you have the typical market mechanics, right? There's not a nature market or biodiversity market to trade on yet. So do you piggyback on carbon? Again, that's where a lot of people have taken the approach of co-benefits to bring those things to finance those projects through carbon credits. But I think over time we will see the emergence of biodiversity markets or nature markets where those credits or something that looks like a credit can be traded as well.
My understanding of your company, Dunya, is that you provide companies and financial institutions with the tools to measure their exposure to nature footprint. Is that correct?
Yes, that's correct.
All right, great.
Um, so
Got it
yeah,
right.
Dunya Analytics, yeah.
I get a star.
We yeah, so we set out to help companies understand their impacts and dependencies on nature, and much of this stems around emerging requirements, a la the TNFD, the Task Force for Nature-Related Financial Disclosures, which says here's how you measure something as complicated as nature risk in order to prepare disclosures. But the TNFD's process for measuring nature risk is actually quite rigorous
Mhm.
and implementable, I will say, in a consistent way. And so that's the framework that we have leveraged for our platform. But it's essentially like nature is local. As I mentioned, it's not fungible. So if you want to understand nature impacts, you need to look at every ecosystem where you operate. And if you've got, 200 factories around the world or you source from 10,000 farms, how do you assess all those ecosystems at scale? We develop a platform that does that. So we help companies understand what's the ecosystem circumstance where they're operating, their impacts and dependencies on nature, and how those translate into risks and opportunities for the firm. But this going through the risk lens helps to connect nature and the science about nature and biodiversity loss with corporate financial bottom line, which is something they have a strong incentive to focus on. So we do that connectivity in order to help drive nature action
Mhm.
to build a more resilient world for that company and for the rest of us.
One of the challenges with traditional ESG metrics was that there are just so many of them that there wasn't really a definition even on what people were supposed to be measuring or what aspects they should emphasize. And so you ended up with such a proliferation of ways to measure and benchmark that you it was a struggle for companies to be able to really compare apples to apples. And um, this then probably made it a lot easier for them to greenwash because they could just pick their
Mhm.
metric. Um, in nature, because it sounds even more complicated because you, at least with carbon, as you say, you're just measuring carbon dioxide in the atmosphere. Um, what is the way that you try to bring some kind of simplicity and standardization to this so that you can develop a common language that can be used worldwide?
Great question, because it's definitely something that the biodiversity community, I'll call it, are looking at. Nature essentially encompasses everything. It also encompasses climate, but it's everything beyond climate, right? So the TNFD has boiled it down to 13 ecosystem pressures. These are things that drive nature loss, including climate change. But they're things like water use, other natural resource use, land use and land conversion, pollution emissions, introducing invasive species. So I think where we will go with that is we'll end up with 13 or at least one metric for each of those different factors. But for companies, that doesn't necessarily mean that they have to do metrics for all 13. Different companies have or draw impact nature through these different ecosystem pressures.
Mhm.
So if you are a farm, you're probably going to be heavy in land use and water use and pollution emissions. Farming is pretty high impact on the environment. If you are a factory, it might be around pollution emissions and you might have a little bit of land use, but maybe you're also in plastics. So there's the risk assessment process is what are the drivers that your company is contributing and what is your strategy to address all of those drivers? And then the metrics fall out of or should fall out of how you're going to evidence progress on your strategy. So I think a lot of the complication around ESG and the fudginess around ESG is companies make claims without really having a plan to back it up because those claims get them special green financing or it buys customer favor or buyer favor, whatever it might be. They have incentives. There's a lot of incentives to become green, but many companies say they're green without becoming green, and now you have or you've been seeing a significant backlash against greenwashing. Companies that develop their targets based on a plan
Mhm.
that is credible and is actually intended to transform their business, and they've got a way to measure that, then they can come forward with metrics. And there's a significant amount of guidance emerging for depending on what they want to do. So if they want to reduce plastics use, it's pretty easy to create a metric around that as long as you're authentic in the approach and not just like redefining plastics use, which is the kind of thing that gets done from time to time.
Mhm.
But when it comes to like biodiversity restoration or ecosystem restoration, that's where it gets even more complicated because you're like, how do you know that an ecosystem is successfully becoming more biodiverse? And there's an initiative called the Nature Positive Initiative that is developing those metrics and approaches that guide companies and also like project developers and restoration initiatives that guide them on here is how you can qualify and make a claim that you are in fact achieving progress in biodiversity and restoration.
What's the way that you use or don't use AI?
Um, there's a lot of AI companies in our space. We don't use AI for our product because we are focused on quantifying nature risk. Anything that you need the right answer every time, the AI, especially like the LLM stuff, isn't the best tool for that because you can run the same assessment multiple times and get different answers. So it's not deterministic in that way. Um, it's also kind of a black box. We operate as a glass box. So the best way to get companies to have confidence in in risk um, metrics is to be able to explain where they come from, what are the data that they're based on, how did you derive it. So all of our results are fully explainable, fully transparent, and how they were achieved. Where we see AI helping significantly, I mean, there's some companies like working on can it help write reports and things like that? Perhaps. I think that remains to be seen how effective that is because It's still, again, not 100% reliable, but
Mhm.
it can, I think AI is very good at recommending things. So maybe it's good at a first draft, right? That then you can go and verify and stuff like that. But is it faster to have it write for you and you verify, or is it faster to just write it yourself? This is something that we deal with every day when we're trying to figure out, like, can we get any productivity gains? Where I think AI adds the most value is where there isn't currently a solution to do something around big data. So some organizations that are doing, remote sensing or photography from space and trying to map the whole world of like where are the forests and where are the wetlands and where are the arid areas, that becomes impossible to do at scale without some kind of automation or AI support. And even if you only get 60% accuracy or 70% accuracy, maybe that's not good enough for a hard financial number, but that's better than nothing when you're
Mhm.
talking about doing something as big as mapping the whole planet.
And what else do you see going on in at whether it's a Dunya or in your space? Um, from a fintech perspective, are you seeing new activity, new sort of models, new ideas bubbling up into addressing nature and carbon issues?
Nature tech is so hot right now, especially if you're in nature tech. Like there's new companies emerging every day that have some really incredible ideas. From like MRV, which is measurement, reporting, and verification. So that's the how do we measure biodiversity? How do we evidence that we are becoming more biodiverse in a particular area around restoration? You have like all the risk management solutions helping companies to identify opportunities and risks there. You have the whole finance sector, like organizations trying to develop ESG metrics around nature. Then you have sector specific stuff, which is focused on like how this industry manages water or how the construction industry, reuses materials around circularity. I learn about new companies, multiple new companies every week. And like it's such a cool innovation. And actually, we just read a report and posted on LinkedIn about it that there's an estimated $10 trillion of market opportunity waiting to address this new economy, like as we emerge, or as this new economy emerges, like this is what's at stake. It's millions or billions of jobs, it's trillions of dollars in economic value. And again, if you think about the economic revolution that fossil fuels brought in, right? Like that's been spent. We've kind of beep curved out that one. So now like what's the new area to innovate? What's the new revolution that's coming? And it's the how do we build a more efficient way of existing? How can we live within the planetary boundaries? How can we protect or protect 30% of the planet and efficiently use the other 70% of the planet for the billions of people that we have here? Like there's infinite amount of opportunity in that space. So I'm personally very excited about that. And again, if you or people who are interested in like, hey, what are the jobs of the future, and everyone's either excited about or panicked about AI, I think there's a whole slew of career opportunities available in what I'll call generally sustainability or the sustainable economy that's emerging.
How much of that is going to be in different parts of the world? You've worked in Asia. We met in Hong Kong some time ago. Just curious about where you see those opportunities, what you see going on in China based on your experience there, how that stacks up to Europe or the US or emerging markets. Just in terms of that TAM and that opportunity, where is it really going to be right now?
Well, I'm seeing it everywhere. There's
Hmm.
not a continent that I know of that isn't like booming with innovation at the moment. China has been a global leader in renewable energy. The EU has been leading in the regenerative economy and like how do you redefine farming and get farming to be good for the land instead of extractive.
Hmm.
Um, the US, is has a little catching up to do, but there's still a thriving innovation ecosystem in the US around sustainability. So I would say, from a policy perspective, there are parts of the world that are really leading, China, Japan, EU. But globally, where the innovation is coming from and the opportunities, I would say it's everywhere.
One of the more effective uh, themes from the previous wave of carbon initiatives was around the and financial risk, which is where you dwell, was this threat of stranded assets.
Mm.
So, although it's a very long-term threat, it was the idea, I guess, that you would be investing in these oil production facilities or something that at some point would no longer be returning a positive return. Is there an equivalent of that in the nature space? And what is the one thing that's really going to grab the attention of a board or its shareholders?
I think one of the hot topics right now is water. So AI is very water thirsty and they're trying to build AI data centers everywhere, but water is not available everywhere and it's not being managed well. Um, Water comes from healthy ecosystems, right? It doesn't, I mean, it falls from the sky, but it doesn't fall from the sky right into your data center. It falls into ecosystems. The ecosystems kind of clean it and collect it and provide it to you in a consumable way. But if we're not doing that ecosystem restoration, we're destroying the sources of water. And that is becoming a financial limitation right now. So that's definitely a hot topic, I think, or an approach from a board member's perspective. When it comes to stranded assets, like there's a case where Coca-Cola in Uttar Pradesh, India, they had a bottling facility there that the government forced it to shut down because the community believed that they were causing the water scarcity issue. Whether they were or not is irrelevant because the community believed it and the government took action. And that was a factory that just had to be put out of operation, millions of dollars lost. Um, in climate, you have physical risks, right? Like the risk of buildings burning down or becoming unusable because they're underwater or damaged by floods. So that is a real risk that companies are more easily to get their heads around because that's happening right now. The
Mhm.
water thing is happening. The water scarcity is happening right now. But next week we're doing a webinar on plastics litigation, and plastics might be the new PFAS, right? With billions of dollars and litigation. Meanwhile, the fossil fuels industry is building plastics factories like crazy. And if countries and jurisdictions start banning plastics or creating fines for introducing plastics or not recycling plastics or mislabeling plastics, that could create a huge financial risk exposure for those companies that may ultimately end in they built a very big, expensive plastics factory that then they now can't crank enough cheap plastics out of in order to make it profitable. So I think there's a lot of risk around stranded assets as well.
Okay. Well, I think we'll end it there. Your last comment reminded me of one of my favorite movies, The Graduate, which is an old-time classic, before my time actually. But Dustin Hoffman's about to graduate and his father's cronies tell him, plastic, son, that's the future. And he just sort of, he looks at them like they're crazy. And it turns out, I guess, that Dustin Hoffman was right. Okay,
Yeah.
so Megan Pillsbury from Dunya Analytics, thank you so much for joining me today.
Thanks, Dean.